Hey, Crystal A, CPA here, and in today's video, I'll be helping out the married or soon-to-be married couples by going over the pros and cons of filing jointly or separately. Of course, as a married couple, you are free to choose any option you'd like when filing your annual tax return. But there are some important differences that you should consider, and in a lot of cases, these differences could impact how much in taxes you pay or how large your refund is. And none of us want to pay more in taxes than we legally have to. After all, taxes are already your biggest expense. So if you want to choose the absolute best filing status option as a married person, then be sure to watch this entire video. And please do me a favor and hit the like button for me and comment any thoughts or questions you may have throughout the video. To start, let's begin with the tax implications of filing jointly. To file married filing jointly means you and your spouse file one return, and it includes each person's income and deductions. Now, in general, more tax breaks are given to couples who do file jointly. One of those tax breaks is the largest standard deduction, which allows couples to write off a significant amount of their joint income. For tax year 2021, those who file jointly receive a standard deduction of $25,100. Another benefit to filing jointly are the more favorable tax rates. Tax brackets for 2021 show that joint filers are only taxed 10% on the first $19,900 of taxable income. Compared to those filing separately, they are taxed at 10% on taxable income up to $9,950. And these tax rate differences continue as income goes up. Married couples are able to earn more while having a lower tax rate compared to those who have similar incomes but file separately. There are also additional tax credits offered to married filing jointly couples, such as the Earned Income Tax Credit, or EITC, which is a tax credit that benefits working people with moderate to low incomes, the Child Independent Care Tax Credit. This is a tax credit that can help offset childcare expenses if you are working and need daycare or a nanny to watch your child. There's also the American Opportunity and Lifetime Learning Education Tax Credit. This tax credit benefits people who are in college or has a spouse or child who has college tuition expenses. Again, if you are married and file jointly, you have the opportunity to take advantage of these tax credits and receive significant tax savings. If you are married but filing separately, that would automatically disqualify you from taking advantage of these tax credits. Another possible reason to file jointly versus separately could have something to do with your state. If you happen to live in a community property state, filing a separate return results in additional tax rules and possibly owing more taxes. Community property states include Arizona, California, Idaho, Louisiana, Nevada, New Mexico, Texas, Washington, and Wisconsin. Now, there are situations where married couples should consider filing separate returns. Probably the most obvious reason to file separately is because you would save more in taxes if you filed separate. But you could simply prepare a return jointly and prepare returns separately and see which scenario results in less taxes owed. You could ask your CPA or tax preparer to run a side-by-side comparison for you and see the outcomes of each filing status. It is completely fair and legal to go with the filing status that would result in lower taxes owed. Another reason to consider filing separately is one of you has really large medical bills. In tax year 2021, the IRS allows taxpayers to deduct medical care expenses that exceed 7.5% of adjusted gross income if you itemize expenses. If you file jointly with your spouse, your medical bills would have to be higher in order to take advantage of this deduction. However, if you file separately and only show your income on your return, your medical expenses would reach the 7.5% threshold more quickly. For example, if you filed jointly and earned a joint income of $90,000, you need at least $6,750 in medical expenses before you start deducting these expenses, or 7.5% of $90,000. On the other hand, if you file separately and had income of $50,000, your medical bills would only have to exceed $3,750, or 7.5% of $50,000. Another possible reason to file separately is if you have to apply the alternative minimum tax, or AMT, to your joint tax return. In tax year 2021, AMT is applied to joint taxpayers who earned over $114,600. Filing separately would be beneficial if just one spouse would be liable for AMT, as opposed to both spouses. For 2021, if you're married filing separately, the income threshold for AMT is $57,300. So if one spouse has $90,000 in taxable income and the other spouse has $40,000 in taxable income, if you file separately, only the spouse who earned $90,000 would owe AMT. The last reason here to consider filing separately is if you are going through a divorce. If you and your spouse are going to separate and you want to avoid any tax liability that your spouse may have, you may want to consider filing separately. When you file jointly with your spouse, you both are claiming the same income and also share equally in the entire taxes due, even if one spouse earns significantly more than the other spouse. So if you file jointly and your spouse doesn't pay their fair share, you are still responsible for the taxes due. But when you file separately, those responsibilities are kept separate and you are only responsible for the taxes owed on your return. Now, in turn, if you have a spouse who has unpaid student loan debt, you may want to consider filing separately as well. Currently, student loan payments are in deferment, so no one is currently defaulting on their federal student loans. But how it's worked in the past and likely in the future, if you haven't made payments on your federal student loans for more than 270 days and are due a tax refund, that tax refund is rerouted to the Treasury and applied to your unpaid student loan debt. So if you file separately, at least one of you would receive a refund, which should probably be the person who has not defaulted on their loans. If you're still unsure about which filing status to choose, the best way to figure it out is to prepare your tax return in both ways. You may want to do this every single year as your income or situation changes. But in general, couples who file jointly receive more tax breaks than separate filers. And filing separately makes more sense in the cases of divorce, relief from liability, or results in more tax savings. Let me know if you have any questions in the comments, and I'll see you in another video.